Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of FDAP, what that acronym means to you, and how the U.S. taxes it. So FDAP is Fixed Determinable Annual Periodic. It typically applies to investment income. And when someone is a non-resident alien, which means they're not a U.S. citizen, they're not a legal permanent resident, they don't qualify for the substantial presence test, or they don't meet the substantial presence test, they're considered a foreign person non-resident alien. When a non-resident alien wants to invest into the United States economy, the U.S. is oftentimes still going to tax it if it's considered sourced U.S. And so most passive income is going to fall into the FDAP category. When a non-resident alien invests into the U.S. and they have FDAP, they will typically have to report that income on a Form 1040-NR. Common types of FDAP transactions: investments into securities, funds, stock, income that's being generated, dividends, and capital gain. Important to note, dividends are going to be sourced in the U.S. Capital gains are typically not. So if you're a non-resident alien, you're only generating certain capital gains in the U.S. That capital gains may not be taxable at the U.S. level. If you happen to be in a country that doesn't tax the capital gains, good job. Real estate, investment, flipping, rentals, that's typically going to be FDAP as well, and so there is a withholding. In fact, the renter of a real property owned by a non-resident alien is supposed to withhold 30% and shoot that over to the IRS if that actually ever happens. In certain transactions, you could modify or you could change or elect to change the FDAP into ECI, effectively connected income, U.S. trade or business. That way, in the real property example, then you can take the deductions that you would ordinarily take for real property rentals if you were a U.S. person. Commissions, marketing, advertising, HOAs, things like that. The tax implications of FDAP can be pretty brutal. The baseline perspective is that the U.S. institution is going to withhold 30%, right? Now, if you're in a treaty country, you can do a treaty election. Normally, you could do it on a W-8-BEN. You could identify it on your 1040-NR, in which you're telling the institution, hey, I live in country X, there's a treaty. That treaty says the withholding is supposed to be reduced to 5, 10, 15, even 0, depending on the source of income. So that's super important. Non-U.S. persons who stay in the U.S. too long, the 183-day rule for capital gains that would otherwise be non-taxable in the U.S. suddenly become taxable. 183 days is thrown around a lot, right? 6 months, half a year. Things to keep in mind: that is not the same as the substantial presence test. It is not the same as the Puerto Rico bona fide residence test. It's just the capital gains test. Expatriation. Oftentimes, we assist taxpayers with expatriating, and what will happen is the taxpayer leaves the U.S. and doesn't realize that now they're a non-resident alien. No matter how many times we discussed it, now they're a non-resident alien. Since they're a non-resident alien, that income that they had in the U.S. is going to be treated differently. There's going to be that significant withholding. So depending on whether a person is going to a treaty country or a golden visa country that may not have a treaty with the U.S., it could impact the tax rules. So it's very important for non-residents who are investing in the U.S. and FDAP to get a good baseline of what their tax implications are going to be for those investments. If you're out of compliance, there's various programs you could use to get into compliance. They may not apply to non-resident aliens who don't have to file U.S. tax returns, but then there's always something you can do, right? The programs like VDP, new OVDP, voluntary disclosure program, Streamline, generally is limited to U.S. persons or those that have to file a U.S. tax return. But reasonable cause is always an opportunity to get in front of the IRS and try to avoid any tax consequences, penalties, things of that nature. We have lots of free information on our main website, goldinglawyers.com. We have sub-websites as well for different areas, FBAR, 8938, expatriation, etc., etc. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.